Hello, good morning, everyone, and welcome to a breakfast show for one, because Jose is too tired to come on the stream. Shame on you. Anyways, this is going to be a very short one. We have an hour or so until the market opens, so it's just going to be a small recap of what has happened this week, and then, of course, we'll do some Q&As as well. First up, good morning and good afternoon to everyone that is joining me today, Friday. Nice end of the week here. So good morning, good afternoon to everyone. Let's actually have a quick look at what the market is doing right now before it opens, and the European markets here as well. We see that in Europe, markets currently are red as they are expecting to get a letter from the White House. I do believe that Canada got one as well. In Asia, markets are red, mix-ish. In the United States, we are right now pre-market red as well. The Dow Jones, S&P, and the Nasdaq are red here. Oil is up 1.1%, and the 10-year is, at 4.38% at the moment. We're going to have a look at some popular names, because we do have some more downgrades, upgrades as well for some popular stocks here. So, okay, it does seem like today we might get a small pullback in maybe some popular names, but I don't think it's going to be the end of the world. Just to look at how the market ended yesterday, let me pull up the heat map. So yesterday I spoke a little bit about that in my late night video. Some software names, especially the cybersecurity names, have taken a hit. Now, I haven't seen anything yet. Maybe one of those companies got a downgrade, and that affected everyone else, because we've seen that with, for example, I think Delta reported earnings, and then United and American Airlines, they all went up because Delta's results were much better than expected, and guidance as well. So maybe this might be the same case right here. If you know why a CrowdStrike went down 5%, a Palo Alto went down 6.7%, Okta went down, Zscaler and all of that, do let me know in the comment section below. Josh here asks, I don't understand why the market is down this morning because of tariffs. Tariffs have been news all week. Well, I mean, we've also been up quite a lot, so I guess being down a little bit. And since we are here talking still now about Europe, and that's a big trading partner, you can understand why. Market maker, I mean, Actually, we'll have a look at some of those names. Um, where did you get your sofa? It's a couch. It's not a sofa. And this one I got at Nvidia. Oscar got downgraded. Indeed, Oscar did get downgraded. So we're going to have a look at that as well. But it's all about the same rationale right now. When you look at the downgrades for Oscar, for example, maybe let me pull up the charts real quick. It's all about, Centene pulled guidance, MLR, so medical loss ratio is expected to go up. They expected to take, I think it was 200, 400 basis points hit, etc., etc. And that's why we are now downgrading Oscar. But yeah, I mean, Oscar right now still expected to grow. And unless they tell us next upcoming quarter, which I believe they will report at the start of August, that suddenly our guidance is going to change completely, then I don't really see why we should stress about this. Plus, remember, over the past month, the stock is still up right now. It did have a big run up, right? In a couple of days, this thing went up by 60% or something like that. Now we're coming here back down. Of course, that big drop was caused because of Centene's guidance withdrawal. Stock went down 20%, and now we are at around $15 or so. It does also mean that currently, we're going to open under the 200-day moving average. Now, again, for a company like Oscar, we've touched about this in a specific Oscar video. And good morning, Lisa. Oscar is still expected to grow rapidly. They have their mid to long-term guidance, let's say, that is still expected to be quite good. And unless that changes, then I don't see why people are panicking. Of course, if you bought right here at the previous local top, then yes, you are down now 30%. But if you bought right here, $13, $12, or even before, then I think you're still chilling, as they say, and you should just be focused on what the business is doing. I mean, even me, I'm down. Of course, just a small position, but I also bought low 17, high $16 or so. So yes, now I'm also down. But to me, $1, $2 here does not really change anything to the thesis, right? I've seen the comments like, "Oh, what do you think about Oscar now?" I'm like, I talked about it 3 days ago. The thesis doesn't change in 3 days just because the stock is down. Same with another name that became more and more popular. So yeah, I could say here again, the market maker. But Zeta was another one that suddenly spiked, then went back down. And now it seems like we have been trading at around $15 for the past week or so. Has something changed? No. Cheap before, cheap today. Still the same company, still a very, very good business and company. No, I currently do not have a position in Zeta at the moment. And so, yeah, if we look at what has happened yesterday with all the other stocks, Robinhood was up 4%, AMD was up also 4%. It does seem that pre-market is down a little bit, despite getting, I think, another upgrade this morning. So maybe let's have a look at that real quick. But yeah, other than that, we know that the market is pretty heated right now, especially with a lot of the Bitcoin miners and whatnot. I mean, iron is up another couple of percent before the market opens at $17.5. If we look at Cypher, that's also up right now. I would be surprised if Applied Digital is up. No, that's basically flat. What about CoreWeave? CoreWeave is down another couple of percent here. Was down yesterday 9% or so. So it does seem like the market reacted accordingly when the deal was announced for Core Scientific, because remember, Core Scientific is going to get acquired in Q4, and the lower CoreWeave is going to go, the lower this stock price should go. But since Core Scientific has already dropped quite significantly, then maybe the market was just front running the overvalued CoreWeave at the moment. So Let me try and find the. Let's first actually go and look at the Oscar one. Let's see. Oscar, where are you at right now? By the way, the analyst that did come out with the price target has half a star on tip ranks. Just an FYI. So this is basically it. Wells Fargo downgrades to underrate cuts price target to $10 from $16. I mean, okay, you had a pretty good price target before. So the this is way too small. The rationale here behind. So catalyst, rising market equity and MLR pressures seen across public and non-public plans, risk adjustment volatility and underestimation of morbidity impacting pricing adequacy, which I think actually I have an answer for that actually in a bit. Then they say here, Oscars around 6% average pricing for 2025 may not offset combined cost and risk trend. The 2025 guidance may be overly optimistic. Estimated MLR could rise 400 basis points versus guided 50 basis points decline. Wide EPS variability, forecasted through 2027. Now, of course, this comes after the whole Centene thing, United Health, Big Beautiful Bill, and all of that. But I did ask here, Grok. Once in a while, it is very useful. So Grok said Medicaid cuts and AC marketplace changes when it comes to both of these companies, United Health and Oscar. Can you expand? So it says here, with regards to Medicaid cuts, the One Beautiful Bill reduces Medicaid funding, tightening eligibility and lowering federal matching fund. This could lead to 3 to 5 million fewer enrollees by 2034, reducing revenues for United Health and Oscar Health, who manage Medicaid plans. Now, as for the ACA marketplace changes, we've talked about this before. This has shortened the enrollment periods from 2.5 to 1.5 months, and expiring enhanced premium tax credits increase uninsured rates 4.2 million more by 2034. So again, all of these impacts will be not right now, not next year, but by 2034, you might be seeing a bigger impact if, of course, these companies do not adapt, and if, of course, these policies do not change since then. Then I simply asked, so it's not going to destroy their business like some bears make it to be. So no, the One Beautiful Bill won't destroy United Health or Oscar. Medicaid cuts and ACA changes reduce revenue and increase uninsured rates. Both companies have diversified operations and adaptive strategies. United Health's scale and Oscar's tech-driven model provide resilience. And so again, I think here the fears are just overblown, in my opinion, at the moment. But as I said, right now I am in the invest and investigate phase for these two companies, and I am just waiting because a month from now I'll probably know way more. And yes, maybe the stock will move until then, but at least I'll have way more information, whether it's through policies or just the company reporting earnings and offering us some guidance. It does seem like TD Cowen did raise their price target on AMD to $165 from $115. So we are getting, of course, more and more price target upgrades right now. Now you might say, oh, this is just them chasing because they've all missed this run up. Yeah, maybe, but it's always important to focus on the business, focus on what management has been telling us, and management has been, well, way more bullish more recently. So that's the most important part here. Oscar Health or United Health, which do you prefer now? I mean, United Health, of course, it's a behemoth, right? If you can't really compare it apples to apples, because United Health generates over $400 billion in revenue, right? It's, I think, the biggest health insurance in the world. And so if you want to play it safe, then yes, you go with this one, because this one is down over 50%. But I own both small positions. If you want to play the non-risk game here, then you go with United Health for sure. If you want to play the potential multi-bagger, then you would go with a Oscar, for example. Let's see. I'm here, so I keep my Google shares. Yep. I mean, can't complain when we talk about Google. We love them Googles. We love them Googles for sure. I decide when when it goes up and down. I mean, wouldn't that be something? Wouldn't that be something? Now, interestingly enough, we were talking a lot about AST Space Mobile. We've of course talked a lot about Rocket Lab before. They've been doing extremely well, but I stumbled upon another space company from Canada, and for some reason it's called MDA. And yes, of course, it has also run up quite significantly more recently, and it's very, very overbought at the moment here on the daily, and actually even on the weekly. But it is an incredible company. Okay, we've talked about Rocket Lab and AST Space Mobile, and just for comparison, AST is worth $14.7 billion at the moment. Rocket Lab is, I think, a little bit more than that right now at $18 billion, while MDA in Canadian dollars, MDA is worth around $5 billion Canadian. Now, $5 billion Canadian, but they have generated over $1 billion in 2024, which is, of course, a lot, a lot more than AST and Rocket Lab. And so, yeah, I just wanted to share this with you before I dive a little bit deeper. I've posted about this on X an hour or so ago. I think this is a very interesting company that, I mean, is expected, according to management, still expected to grow quite rapidly in the upcoming years. And I'll quote them. They have a backlog of $4.8 billion, again, Canadian, and they expect approximately $20 billion of booking opportunities over the next 5 years. So, yeah, again, business of $5 billion Canadian, generating $1.2 billion in revenue, still growing very fast. And for some strange reason, I have not seen a lot of people talk about this. I mean, it's definitely my fault as well, since I am interested in space and I didn't stumble upon this before. So yeah, very interesting company. I highly suggest you go do your due diligence, or you wait until I make a video about it in the near future. All in MDA? No, not all in. Just yet. Is it SOFA or SOFI? I mean, a SOFA paid by SOFI shares. Wouldn't that be something? Markets are down because Jose is sleeping on the job. Yes, exactly. We will definitely make sure he knows that. How do you balance the positions of Oscar and United Health? It's actually the same size right at the moment, positioning wise, very, very small, and both of them are around the same size. I'm not in ASML, but now that you ask, let me actually see what has been happening with it. Still around the same, around $800 or so. I do not own ASML. I do not own any equipment maker in the semiconductor. I have taken a look at Atlassian team a couple of months ago, I think, or a couple of months ago. Yeah, I think probably somewhere here. I think it was in one of these monthly videos, because it crashed, And so, very interesting company. Of course, I showed it as well because it is the sponsor of Williams in F1. It's yeah, very interesting. And this one is also, so I think software just got hit yesterday because this one was also down 9.4%. Oh, look who we have here. Jose in the house. You know, if everything crashes today, it's your fault. If everything crashes today, it's your fault. But hopefully Nebius crashes just enough so you can open a position and I can add even more shares during the day. And yeah, let's see Nvidia. What's this Nvidia doing? It's still a $4 trillion company at the moment. But yeah, it seems like software yesterday has taken a hit for some strange reason that still I don't know about, and it seems like the chat doesn't know about either. So we'll see. We'll see here. Google is no. I thought Google was up, but no, I would have been lying. Google is not. Google is not up. Shame. No U.S. government tailwind. You're asking about MDA. I think MDA is the majority of their revenue does come from Canada, but the second largest is from the U.S. government. So I would assume yes. But there is, from what I understood, is there is one NASA-led program that currently there are some question marks around it on whether or not it's going to expand or not. So we'll see. Yeah, so MDA, yeah, so there are definitely some tailwinds, unless some big program changes happen. But I'll probably make a video about it because it is a very interesting name and one that, despite it going up quite a lot recently, I think it's still under the radar because I've only heard about AST and Rocket Lab on a daily basis, and nobody talks about that. How to pronounce my name? My name is Neil. So like Neil Armstrong, the guy who went on the moon, same. Hymns, no, I have no position in hymns, but I did make a video also after it crashed, after the Novo Nordisk crash, which was basically this. And yeah, seems like since then the stock has rebounded around $25 or so. Simply put, and I've explained that in the video, simply put, it's because when you buy hymns, you buy the hymns platform and not just the weight loss part of the business, although of course that part of the business could become gigantic, but you buy the hymns platform. And I did also still say the risks, right? Because compounded drugs, of course, are, in my opinion, just not the way to go, and that's the risky part of it, or the questionable part of it, I should say. I am still very bullish on the local, and yes, I know the stock could perform better, but just like plenty of other stocks that have not done anything for the last, let's say, 12 months or 2 years or so, and then suddenly doubled or tripled, I do expect the same pattern here. Just be patient and let the business do the talking. Remember, we've spoken about SoFi for such a long time. I actually show you the weekly just to better picture, right? We've talked about SoFi here, even here. I mean, even I've talked about SoFi even here. And yeah, it was always the same thing. Oh, crap company, because the stock doesn't move. No, but the business all the time, the business here became better. Here it became better. Stock went a little bit higher, but the business became better and better and better. And of course, since then, I mean, over the past 12 months, we've gone from what, $6 to $20. That's an amazing performance. I'm not saying that the local over the next 12 months will also triple, quadruple, but I would not be surprised. That's the thing. I will not be surprised. I'm still very bullish on that company for sure, for sure. Tesla is, let's see, Tesla back to 300 or 309 actually. Long-term thoughts on Tesla. I mean, it's up to, I still have in my core portfolio, not in the public one because I don't need that extra exposure still. Yeah, still bullish on autonomous vehicles. even though I believe there are going to be plenty of winners there. Bullish on the energy side of the business, especially because it seems like everybody's only talking about autonomous vehicles and robotics. Although robotics, we are still seeing $0 from that today, and we're probably not going to see any dollars from that for the next year or so. And so, yeah, long-term thoughts on Tesla is as long as the business delivers. Yes, it might not be on time, but as long as they deliver, I think they'll do well. Don't forget, it's already worth I think, close to $1 trillion right now. So that at 10x, I don't think it's going to happen. Although you never know, you never know. So yeah, that's my thoughts there. And of course, I mean, remember they launched robotaxis in Austin, and then I saw Gally from Hyperchange tweet, "Oh, it's surprising that nobody's talking about the robotaxis that are now driving around Austin." And I'm like, first of all, invite only, I think still. Second of all, of course, nobody's talking about it because, well, a couple of days later, Elon decided to make his own political party. So, yeah, it makes sense, right? Because the clicks are for Elon and not for Grok 4 or autonomous vehicles and stuff like that. Roberto here with an answer maybe for our software names. What is this? Come on, CrowdStrike. So for the software yesterday, July 2nd reading NAIM exposure index was at 99%. So the possibility for a rebalancing pullback is strong. NAIM index. Let's see what that means. Exposure index provides insight into the actual adjustments active risk management have made to client accounts over the past 2 weeks. Okay, and National Association of Active Investment Managers. Okay, so rebalancing, you say, for those specific names. Okay, I mean, I'd say makes sense, but then yes, it's true that some of them are quite overvalued and expensive. But I mean, a Salesforce, for example, is still very cheap and a high quality business. Plus, are we going to need more cybersecurity in the future or less? I think we're just going to have more cybersecurity in one, in my opinion. So okay, but at least now I have an explanation. So thank you very much. Let's see. What are my expectations for so far? Business will continue to grow. What will the stock do? Could it reach $25 per share at the end of the year? Well, it definitely could. Am I betting my house on it? No, I just have a very good position already. So honestly, I don't care if we hit $25 today, tomorrow, at the end of the year. I think it will hit it eventually, and we're actually going to go much, much higher, much higher than that. And you can see the public portfolio every Sunday. There is a weekly video. We do that, and there is also a link to Savvy, to the portfolio in the description below. But I do weekly videos on Sunday. I mean, yeah, it comes out every Sunday. I don't understand Oscar running at a PE of 5. Wait. I don't understand Oscar running at a PE of 5 times from United Health. Oscar was made from the Obamacare and destroyed by the... But it did not... but it is not destroyed by the Big Beautiful Bill, as I explained before. It does not destroy the business at all, actually. The changes, yes, could affect the business by 2034, but it does not destroy the business at all. Plus, I mean, if we're looking at a PE for Oscar right now, compared to a company that has been around for many, many years, it's not really an apples to apples comparison. I mean, judge Oscar 5-10 years from now on its PE compared to United Health when the company actually had consecutive years of earnings instead of just, what is it, not only 1 year. And again, I could be very wrong. And that's why I am now in the invest and then investigate stage. That's why it's a very, very small position. And I am waiting for more information from those companies at the end of the month, beginning of next month, because they will report. earnings and provide guidance. And I think that will be a very, very important part. Yes, very good information. So thank you, Roberto. Is Nebius in buying territory right now? So me, as someone who already has a position in Nebius at a much lower average, to me, I wouldn't mind adding a little bit more, $46, $45, whatever it will be when we open. And I would probably add way more if we come closer to a $40, for example. If you do not have a position, I'd say do what's best for you. Start maybe small and then add accordingly. Even if it goes up, I mean, it's what, $11 billion in market cap. I bought Nebius because I do think it's going to be a gigantic company. I'm not saying it should be worth $70 billion like CoreWeave, not at all, but it should definitely, it will probably be bigger than $11 billion in the future. That's just my opinion, because I do trust management. I think execution here is key, and has been doing. They have been executing quite well. So yeah, I think starting now and then seeing if it goes lower and accumulate more is probably the game plan for me. Rubrik is on my list to study a little bit more. It's also one of those companies that went public, and also Rubrik. And also, it seems like it has gone under the radar, right? It has performed extremely well, and it seems like it did go a little bit under the radar. This was a pretty good opportunity, I guess, just at the 200-day. Can it go lower? I don't know. I'll have to study the business a bit more, but yeah, it's from what I've seen, really quick, it is a very interesting company, for sure. Nuclear, I don't really follow. I know I have here Oklo on the list, but I just put it on the list just to show you guys what is happening with the stock. Could here be a cup and handle pattern? Could very well be. But remember, with nuclear, these things do take a lot of time to play out. A lot of time. So that's just my personal opinion on that. V-shaped recovery basically here for AMD. So keep buying more. I mean, I have time. I've been buying a lot from here all the way through here. I mean, even from here all the way through here, and even until here. So I'm happy with my position right now with regards to AMD. Someone asked here, this is again one of those high quality companies, new holdings for sure. Do you think new can recover quickly? I mean, does it have to recover quickly? Why should it recover quickly, right? Wouldn't you like for it to drop even lower and buy more shares? Because yeah, the tariffs on Brazil, how does that affect a company like Nu? I don't know, right? It doesn't make much sense. Even if you look at Mercado Libre, yeah, Mercado Libre, it did drop, but look at where we are stock wise, right? Still not that far from is it all-time highs? Yeah, of course. Not that far from all-time highs. And so yeah, I don't even think Brazil exports that much anyways. So that 50% shouldn't really shouldn't even impact Mercado Libre, because Mercado Libre operates in Latin America. So the impact there shouldn't really be that big. So new Meli, to me, it's yes, the stock is up quite a lot, and you might say, oh, well, it's super expensive because it's at $2,400 per share. Yes, the share price is very expensive. The business is not the cheapest one, but for high quality, one of the best businesses out there, you will always pay a premium on it. And I am a holder of Mercado Libre in my core portfolio. It's one of those companies where I buy and I just don't touch. So yeah, don't be afraid to wait for things to drop a little bit more, especially not if it's a quality company, and then you can buy a little bit more of it. Let's see what Novo Nordisk is moving slowly but surely. MongoDB is a name I've seen pop up a couple of times, but I've never really looked into it that much. to be honest, so I can't really share much about it. This company is a company I did cover more recently, and as you can see, huge drop since January, right? Cut in half basically. Can it recover? Yes, I think it can recover. I think growth-wise, it's there. Growth-wise, we are there. We are seeing growth, whether it's the Hoka brand or just the main brand. There is definitely growth. I've talked about this one. I've talked about On Holdings as well. Both brands are growing very fast. Of course, much smaller than a company like Nike. Nike has also seen a nice rebound more recently. Also, one, because of the tariffs, two, because of the earnings not being as bad, I'd say, as expected. But of course, currently Nike is not growing, and the other brands are growing much faster than it. So that's that about the Deckers, On, or Nike. Nike is a turnaround story, and you know me, I like turnaround stories, but not at this time, not with this one. Plus, yeah, if you want to have exposure to shoes or retail or whatnot, why not go with just a company that is growing 50% or something like that instead of a company that is not growing, let's say. Let's actually have a look at a couple of topics here. So this is also one of those stickers that I've seen floating around in my comment section. So Gorilla Technologies. So they announced it has an active global pipeline worth $5.6 billion across 87 opportunities and is now an official NVIDIA solution provider. It expects to close $1.3 billion in contract by mid-2026. With deals spanning 3 to 15 years, the company plans a big US expansion. It has $108 million in cash, so I probably expect some raise in the near future. Stock-wise, let's see what has happened recently with the stock. Yeah, so Wednesday, it jumped 17%, but since then it's down again. I think the market has figured out that, okay, using NVIDIA's name every time does not really help you help the business that much. We've seen that time and time again, but okay, interesting announcement. Sharplink Gaming, funny, a friend of mine talked about this last week because he's big in crypto and all of that. He talked about that, he likes Ethereum, and I was like, okay, Sharplink Gaming, how serious can that be? Well, it seems like the market is in a good mood because since then the stock has doubled, so not bad. Not bad. So Sharplink Gaming acquires 10,000 ETH directly from the Ethereum Foundation. I do believe that Sharplink's CEO or something is a co-founder of Ethereum, if I remember correctly. Tesla will start India deliveries in August, apparently. So, okay, they're entering that big market. I mean, big market. I just don't know how big it's going to be for Tesla because, well, expensive prices. Let's see, Wedbush, AMC. We don't care about AMC. Oh, we have here a Amazon price target of $300 from Morgan Stanley. Interesting. Ooh. So they raised their 2026-2027 EPS estimates by 9 to 6% for lower tariffs, with $8 of 2026 EPS returning as their base case. Anthropic, Azure's GenAI and non-GenAI strength as supply eased, and their CIO survey gives us more conviction in AWS acceleration ahead. We raise our price target to $300. That's a 35% upside, and set a $350 bull case, so that's a 60% upside. Not bad. Not bad at all. I mean, especially since we've seen that Prime Day was off to a slow start, and I mean, to be honest, I went to Amazon and I didn't really find that many interesting deals that I wanted to buy. So okay, maybe that's one of the reasons. Intel again is spinning off a business here, and in this case, they're spinning off their AI, robotics, and biometrics venture, RealSense. Yes, Intel when you look at Intel, the amount of companies that they own and investment that they've made, you would think that they would be a $1 trillion company, but they were so mismanaged in the last 10 years or so that missed opportunities across the board. But yeah, maybe this is just them making sure that the business is being streamlined, raising money wherever they can, and focusing on what's the most important for them right now, with, of course, Intel Design and Intel Foundry business. Let's see. So this is what we've talked about before, the Oscar price target. Got here some Starbucks ones. Okay, other than that, let's see. U.S. Secretary of State Rubio, odds are high for Trump-Xi meeting. Trump has a very positive relationship with Xi Jinping. Okay. Funny enough, I did check for tickets to go to Beijing later this year, and surprisingly enough, tickets from Europe are very, very cheap. I don't know why, but it is very cheap, especially compared to Tokyo, for example. For Tokyo, I had to pay over 1,000 euros, and to go to Beijing, same dates, I'm paying 500 to 600 euros. I know, okay, Tokyo is a little bit further, but not that much further. And so I found that quite peculiar, to say the least. So I don't know if there is a reason for that or not, but thought it was interesting to share. Oscar Health stock getting wrecked. It is getting wrecked. Let's see if it's down a little bit more right now. No, still at 15. Still at $15, which is a price we have not seen since, well, almost a month ago. So yeah, again, if you bought above $20, if you liked it above $20, you should love it at 15. That's just the plain truth. Do we know what came of the Jensen Trump? I don't know if it already happened. That's the thing. I know it is supposed to happen, but I don't know if it already happened. So we'll see. I'm sure some things will come out of it whenever. So we'll see what happens when we get more information. A week in a recap. Let's put it like that. Let's see, what do we have? What else do we have here that is happening at the moment? We have actually a Tom Lee video. If some are interested in that, let's.
Granny Shots ETF. This is our update for the week of July 9th. Let me first start with some particulars. As of July 8th, the price was $22.57, net asset value of $22.56, and total assets of $1.556 billion. For the week, Granny Shots gained 0.85% compared to a 0.46% gain for the S&P 500, or a relative performance of 39 basis points. Year to date, Granny Shots is outperforming the S&P 500 by 644 basis points. I thought I would start with a quick word on macro July seasonals, which are positive, and I think you should just keep this in the back of your mind, that when we look at the first year of a presidency, these are the purple columns, July is actually the best single month of the year, with a median gain of 2.4%, and that's out of 24 years in the sample. And that compares to all years when the median gain for July is 1.6%, which is still one of the best months of the year. Now, if we plotted this as a composite of those 24 years in purple, you can see how the market generally plays out in the first year of a presidency, that we might make our peaks in August or so. And 2025 is tracking as follows in the red. And then this is July. But notice 2025 is tracking pretty closely to the composite. In fact, some people might say it's almost the same chart. And despite all of that, investors are still really cautious. We had a 28% rally from the lows after those tariff liberation lows. And if you compare to the other 28% rallies in the past 10 years, the 20-week AAII sentiment, which is the percent bulls less bears, is generally positive. But look at where we are today at minus 22. Investors have been staunchly and stubbornly bearish despite a.
I mean, it makes sense, no? I mean, it makes sense because one, the tariff situation is not over, so that might be a reason. Second of all, interest rates are still high. We don't know when cuts are going to happen, which could be seen also as a bullish thing, right? We are now in a bull market. I think, I mean, it's been 2 years already of a bull market. Yes, we had a small correction, let's say, that didn't really last that long. And so in my head, I'm like, okay, if this is what is happening right now without rate cuts, imagine what will happen with rate cuts. And so, okay, I can understand that some are still bearish because interest rates are still high. Inflation might creep back because of those tariffs. But yeah, I think there is still a long way to go with this bull markets. That doesn't mean that we can't experience some pullbacks. I actually invite healthy pullbacks.
28% rally. And I think that's why we call this the most hated V-shaped rally. Okay, so let's look at stock performance over the past week. If we look at the top 5 performers, it's Oracle, Palantir, MicroStrategy, GE Vernova, and Arista Networks. So the contributors here are really basically AI names, and of course, Bitcoin, which is MicroStrategy, and it is why it is a granny shot. In terms of the bottom 5 performers, and they're posted here, leading or worst of these is FICO, and it has to do with Washington, D.C. We talked about this a couple of weeks ago, that Pulte, who is the head of FHFA, wants to reduce the reliance on companies like FICO and reduce the cost of actually getting a mortgage or even getting into a home. And so he's actually focusing on allowing people to use other methods, including either their rents or even something like a Vantage 4.0 score. Now, when this first happened in late May, you could see FICO fell 33%. And at that time, we said we'd give it a week, and the stock did manage to recover, but then it got hit again, and it's down 20%. So, they do say fool me once, fool me twice. That's the problem here. And that's why we're kind of smarting and wondering what we should do with FICO. And especially when, as Tom Black says, when you're explaining, you are losing. But FICO is at support. So I'd say for now, we're going to keep our eye on this. But again, it doesn't make sense to fight City Hall. Now, in terms of styles, the best performing factor or theme for granny shots was energy and cybersecurity, led by Palantir. The second is the global labor supplier theme of granny shots. But again, it's a lot of AI-related names because global labor shortages really relates to AI.
Well, I guess he made that video before the software names like CrowdStrike and stuff like that went down. Let me actually.
It's a lot of AI-related.
Let me actually look at that list. No, not this one. Here, CrowdStrike. So yeah, probably CrowdStrike and Palo Alto Network. So maybe that came down. Who's in the red here other than the usual suspects? Intuitive Surgical, 2.4. 2.45, 2.4. Interesting. Okay, let's maybe have a quick look at that before the market opens. By the way, if some of you do follow tennis, do leave your predictions down below. Sinner or Djokovic. I know there is now Alcaraz Fritz. For some reason, my TV here on the right decided to change to a women's doubles match. I don't know why they do it, but yeah, shame on them. Anyways, what did I want to do? Look at Intuitive Surgical. Yes, look at Intuitive Surgical. So Intuitive Surgical, okay, we've seen a rebound from, okay, not that bad, pretty close to the 200-day moving average, and that seems like to be an area where the stock has done quite well. So okay, let's put this. Voilà, the poll is live. I don't know if anyone is actually familiar with that, but fine. Amanda, yeah, I mean, yesterday's game was a pretty good one, but I don't think she has a chance to beat Swiatek, to be honest. I don't know. She was very, very strong yesterday. Very strong. Red Cat Holdings. Isn't that the company that also partnered with Palantir, I think? Let's see. Red Cat Palantir. Yes, Red Cat partners with Palantir to equip Black Widow. Okay, interesting. Red Cat, let's see, is rooted in innovation and developing robotic solutions. Is it also a drone? Red Cat, all I'm getting here from Google's are literally red cats. So yes, okay, drones. Yeah, makes sense. After the announcement, I guess drones are back in action. I think Ondas was also one that went up nicely more recently. Let's see. Uh, Doctor Couch. How are you doing in the stock? Good question, actually. Good question. Probably I'm not. Probably I'm still behind. Um, Probably I'm still behind because I do have the local Baba PayPal right now, and those have not really moved much. Whereas SoFi, for example, like Tebis took SoFi, and Nebius Rocket Lab, they have been moving. But hey, it's a 12-month thing. It's a 12-month thing, and if let's say the local Baba and PayPal do move 3 months, 5 months from now, then I think I can make my way. I think I can make my way back up. I also own Google in the stock draft, so we'll see. We'll see what happens with that. Because I mean, if let's say PayPal does go above $100 by the end of the year, which I think it should, then maybe I will outperform. But then again, if Tevis wins, then that means that SoFi is performing extremely well, and I'll be happy with that because that's in my portfolio as well. We're talking here about Formula One. My take on Christian Horner being sacked by Red Bull. I mean, the guy has been there for 20 years, huge success with them, right? Eight championships, God knows how many races, how many pole positions. So, yeah, I mean, he's the reason why Red Bull is on the map right now, if we're being honest. Of course, the drivers Vettel and Verstappen are also the reasons why they won 8 titles. But I guess when it doesn't work anymore, it doesn't work anymore, right? For me, Max just has to go to Mercedes next year, plain and simple. Max has to go to Mercedes next year and win the championships, the upcoming championship with Toto, because I don't want him to waste time on a potential maybe competitive Red Bull. Plus, um, yeah, when you drive for Red Bull, you basically have one driver at the moment, and I don't think you can win something with one driver. That's the thing. That's the thing. So yeah, I mean, it's a shame that he was sacked, but again, like I said, this is not a charity industry anymore. The Red Bull owners are also very serious people. Like I said, 20 years of him being there and making sure that Red Bull is at the top of the game should have been maybe respected a little bit more, right? But yeah, when it doesn't work out, it doesn't work out, and you don't have time to lose in this game, especially not when next year is a crucial year because you have different cars, different rules, etc., etc. So voila. I mean, yeah, that definitely added to the whole situation for sure. I don't know what the end conclusion was there, but that definitely did not help. What did I want to do? Thoughts on Eli Lilly? Great company. Great company, of course, has been outperforming the likes of Novo Nordisk. Yes, the stock has been, let's call it flat for a year now, but yet it has been higher, but still a good company, still expected to do very well in the future. But you know me, I like underdogs. So Novo Nordisk, although I'm still waiting to see who the new CEO is going to be. But Novo Nordisk, I mean, look at how much of a hit the stock already took, down 50%. And it's not like it's going out of business. It's still an amazing business, very profitable. Yes, they did. Yes, they are losing market share, but still should get more clarity once we get a new CEO. So we'll see what happens with that. Other than that, we have 4 minutes until the market opens. Um, let's see if we got some news in the meantime. Some news in the meantime. No, this is not. Yeah, okay, this is better. And then we'll see the market opens and we'll call it a day. First of all, thank you all for joining us or me for a quick live stream right now. It seems like the markets are going to open reddish. Reddish in Europe, we're still red. In Asia, red slash, I mean, mixed. FX wise, euro dollars. Okay, 1.16 right now. We're at 1.18, I think, at the start of the week. So a bit better, at the moment. Crypto wise, $117,812 for one Bitcoin, which of course is good news for Bitcoin miners. I do have to say that I have opened a little YOLO bet. It's not in the public portfolio. It's just a side quest for me. So a small YOLO bet in Iron. The YOLO bet that I have with Jose with Applied Digital. Very, very small positions. If it works out, great. If it doesn't, then it doesn't. Who cares? It's not going to impact the portfolio much. And I do have another tiny position here in Cypher mining, just to see what happens. Just to see what happens. If it does 10x, then great. If it doesn't 10x, then okay, it doesn't 10x, and I'll just take out my money and live to fight another day, right? Live to fight another day. Do we have some news for Viking Therapeutics? I don't know. Leak on good. I mean, if there was, then I would have assumed that the stock would have jumped way more. Yes, it's up. Yes, it's up recently, but you would think that a leak would have pushed this stock up a lot more. A lot more. So I don't know. I haven't seen anything just yet, but let me make sure. In the meantime, we have 67% say Djokovic, 68% Djokovic, 32% say a Sinner at the moment. Let's say 2 minutes before the market opens. Let's see. Do we have something for Vikings? Not that I'm seeing. No, I haven't seen anything yet. Maybe something for other companies that might affect Vikings. Maybe yes. But yeah. Other than that, nothing. By the way, for those that own Alibaba, we got paid, boys. We got paid $126 in dividends from my Alibaba shares. I love me some fake money, as some people call Alibaba, which is funny because this will go straight into me buying just another share of the company. Anyways, the markets are about to open in less than a minute, and so let's see what we have. And the markets are open right now. Let me refresh the real-time action you can see on the side right here. Let me put the best ones here at the top, and it will just update accordingly. So it seems like Nebius is not going to give us some insane opportunities because it's still up 1.5. Iron is up 3.8. Palantir is also up a little bit. Applied Digital is up. Uber is up 96. Uber, lovely stuff. God, the day it will reach $100, that will be a good one. That will be a very, very good one. So let me refresh so that the heat map gets refreshed as well, because the heat map is the last thing to get refreshed. So we got a lot of red actually in the finance sector, in the health sector as well. All the rest here seems to be a bit flat-ish. Let's see who's the most red. So Oscar is now back under $15. Let's see how long that will last. Oklo is also down a little bit. Novo Nordisk down 1.6. AMD down also close to 1% here, but not by much. PayPal is down 1%. Intel is down 1% as well. Apple So these are the red names, but I mean, pre-market, it seems like it's going to be scary, which it could get worse in the next couple of hours. But so far, it's not really the end. It's not really the end of the world. Seems like Oscar is now down 4.3% right now. Iron is up close to 4%, and Nebius keeps going up. So I wonder what. Let's see. Let's see what CoreWeave is doing today. CoreWeave is up after being down 9% or so the day before. CoreWeave is up, and so let's see what Core Scientific is doing. Up a tiny bit. So okay, maybe the market is trying to find a balance between the two. Cipher is up a little bit. It was up a little bit more. It was up a little bit more, but okay, not such a big deal. I mean, these things are extremely overbought at the moment, these types of names. So, this is interesting. With AST Space Mobile, you can see went under the 20-day moving average, recovered, and now we are staying above that. So could this be a zone where you could see a consolidation, accumulation? Yeah, maybe. Of course, AST, a lot of it just the focus is on the back half of the year. If they can show us that revenue that they're expected to generate. So that's going to be interesting. Oscar does continue to drop at the moment. Am I recommending Oscar at this level or wait? I mean, at this point, again, you could wait, right? You have 3 weeks times, I think around 3 weeks, maybe close to a month until the next earnings report, but 3 weeks, less than 3 weeks for the Centene and United Health earnings, which they will provide with more information, of course. But I mean, if you liked it before, why shouldn't you like it right now? Before the risks were also known. So to me, I'm not going to buy more and more because I have my position. And if it works out, then the $2 difference 6 months, a year, 2 years from now, I don't know how long I will hold it, but I don't think will make such a difference. Right now, it does seem like we are in a downtrend currently. I mean, every single day there's another price target downgrade for the company. So don't just go against the waves just to go against the waves. But yeah, I still think this is currently quality business that is still expected to grow quite rapidly unless management completely changes course, which would of course be a red flag. But I don't think that will happen anytime soon. Any other stocks we should look at? Google is basically flat. SoFi 21, so SoFi continues to do well. Also overbought right now, but what else? Let's actually look at maybe some of those names. Okta still down. Palo Alto. Let's see what Palo Alto is doing. Also down a little bit more right now. Maybe Salesforce. CRM. Down a little bit more. Someone asked you about Salesforce, and I like it. I don't own it, but I think it's a very good value company right now. Of course, not a high growth company, but yeah. Dr. Zoidberg here. What's BMNR? Bitmine? That's the thing. Bitmine. I think Tom Lee talked about it, but it seems like a pump and dump type of thing. BTBT. Bit digital. Anyways, can you please explain, you being from Belgium as I am, what the new tax law will hold on gains and will it go into effect? So it seems like it will go into effect next year, 10% on capital gains. But if you do hold it for, I think, 5 years or so, then your advantage is that it's not taxed for the first, I think, 15,000 euros. Because for the first 10,000 next year, you're not taxed, and then you're taxed afterwards. The horrible thing, and this I think is the biggest scam of this whole thing, is that the taxation does not start from 2026. So if I bought a stock 5 years ago and I sell in 2026, I'm taxed on the whole 5 years, not on 26 and onwards, which is, I don't know, it's ridiculous. And the fact that this got accepted is a joke, is a joke. And so, yeah, what's even the point to stay here, right? If there is suddenly a capital gains tax on it, although it's not that high, it's 10%. So okay, cool, and you don't get taxed on the first 10,000. But yeah, what's 10,000? I mean, in gains, you sell one big position, and I think you're already screwed. So, and it doesn't, it, like, if you don't sell in year one, you don't get 20,000 in the next year, right? It doesn't roll over. So they actually incentivize you to sell each and every year up to 10,000, so they can make the tax that you do pay on the transactions each and every time, which I think is just a load of BS, this whole thing. But if the country is almost bankrupt, then I guess you don't really have a choice, right? You don't really have a choice. So yeah. So the point is to hold great companies. You don't have to sell for the next 20 years, selling every year in little chunk where money is needed. Yeah, but the thing is, like, even 20 years from now, let's say you have a 10x, you'll pay 10% on that 10x, because like the 10x, you only get an advantage on that non-taxed portion. You don't even have such a big advantage on the fact that you're going to own it for 10, 20 years. Like if they tell me, oh, if you hold it for 5, 10, 15 years or so, then you will only pay 5% or something like that, then I say, okay, fine, then it makes sense. But here I get the feeling that there is an incentive to sell each and every year 9,999 euros worth of gains. But and yeah, exactly, because they're basically taxing you on your investments. Like you put your money, you put your capital at risk, and with that, we'll close the stream. Maybe I'll show you one last time what the market's looking like. But yeah, you work, you already pay taxes on that. Then you decide that, so it does seem like we're getting a little bit more red at the moment. So yeah, you work, you get taxed on that. Not only that, you will then decide that for you, okay, I'm going to invest, so I'm going to put my own capital at risk, and then you're going to get taxed on the fact that you putting your capital at risk has worked out well for you. To me, just, I don't know, feels like theft. When it smells like theft, feels like theft, it's probably theft. Yes, I understand that taxes are necessary to make sure that everything runs smoothly, but I don't know about you. I've been paying quite a lot of taxes more recently, and I don't think that things have improved that much, to be honest. So, yeah. I know 10% is nothing, but when you pay close to 50% income tax, it adds up quite a lot, quite a lot. So yeah, that's all I've got for you right now. We will be back Monday 8 a.m. Jose will be here, and if not, he will be fined. He will be taxed. But yeah, we will be back Monday 8 a.m. Have a great weekend, everyone. Do not panic sell. Do not chase. Sometimes just look, maybe go out, or maybe don't even look at your portfolio, right? Maybe that's also a very good strategy. Have a great weekend.